Our mission at SD Bullion is clear: the lowest cost gold and silver available online. While we do not have pretty blue boxes, free shipping, 4% credit card fees, or glamorous gold and silver infomercials, SD Bullion has the lowest prices that may save you hundreds on your next order. So before you make your next investment, do the math and join the over 15,000 new customers who have recently made the switch to SD Bullion. Why pay more?
Hey everyone, this is Elijah Johnson with FinanceAndLiberty.com, and back with us today is Dr. Jim Willie, the editor of the Hattrick Letter found on GoldenJackass.com. Jim, thank you so much for joining us today.
It's a pleasure being on, Eli. Are we having fun yet? I'm a little frustrated with the gold and silver price movement, but at least we had a touch of my $18 target for silver, which was indicated on both the daily chart and the weekly chart for silver. But gold's been a disappointment since the Shanghai news of April 19th with the gold fix moving to Shanghai and the RMB gold futures contract in Shanghai. Silver has really been taking the lead, and gold is just one big fat yawn.
So did you want to expand a little bit on this? You said in a recent article that you're seeing that gold and silver prices are about to break out violently to the upside. Did you want to talk a little bit about this?
Yeah, we had the touch of the $18 silver target. That was indicated in both the weekly cup and handle reversal chart pattern and confirmed in the daily chart pattern, which had a rectangle with a bit of an upward bias on it. Each one had a 2-point potential breakout move from 16, and each one indicated 18. We had a touch of 18 a couple days ago. That was great, but now we're consolidating just under 18. I got to be honest, I have not looked at much at the gold and silver charts since 2012 because QE has had a side effect of more easily suppressing the gold and silver price. And furthermore, the Swiss peg of the euro and the Swiss franc had another side effect that was only revealed about a year ago. But gold has been a yawn. It has not broken the $1,300 target. There was a day in the same week as April 19th, when Shanghai had its news on the gold fix and the RMB contract for gold, on the same week, $2 billion worth of paper gold were thrown at the market as supply, phony supply, and $1.5 billion of phony silver paper supply was thrown at the market. This is how they keep the prices down. There's no responsibility, no accountability, no legality, and no law enforcement involved, because it's all for the greater good of supporting the king dollar and what I like to call the reign of terror behind it. So we've had a tepid response so far, and it really just needs a push from Shanghai. I think there's going to be a day when Shanghai just says, we've had enough of your games. We're going to move the gold price $100 higher just to see how these guys react. We're going to move the silver price $1.50 higher just to see how these guys react. See if it maybe topples a bank. There are two big important things regarding silver that I think are worth noting right now, right here and now. One is that it's looking like the U.S. government reneged on the 1999 most favored nation status deal with China, whereby China leased the New York and Washington boys a hoard of silver. And the U.S. did not return the silver after the lease was over. This is just one more lease, one more treaty that the U.S. violates. They're the exceptional nation, as in corruption. Okay, so it looks like J.P. Morgan has been hired by China to acquire the silver and replenish their silver stockpile in China, because the evidence is quite clear. JP Morgan has been doing a lot of buying of silver. Well, why would they be buying a lot of silver when they're trying to suppress it? So it looks like they might have been hired, and it could be related to the open door that China created by purchasing One Chase Plaza, the JP Morgan headquarters. Okay, the second event is much stranger and maybe equally unclear, fuzzy. But I'm hearing from numerous, like it's been at least 3 or 4 clients who have written me and said, and interestingly, it's not from colleagues, it's from clients. They're saying, Jim, are you aware that the U.S. Navy, in order to remain in Middle East ports and pay for their fuel, diesel for the ships, must pay in silver because the Mideast nations are refusing the dollar? Whoa! This looks like a tripwire. Okay, so silver might be chosen by China to trip the precious metal wires and to knock the doors down and to just break the arena that has been controlled by paper. It looks like silver is going to lead the breakout here.
So what about basic supply and demand dynamics? Are those bullish for gold and silver right now?
I think they are. They have been for quite some time. We've had for 2 years, 3 years, tremendous demand coming from the East. I remember The Voice told me as of March of 2012 that the White Dragon family, the group, the bankers, hired various agents, including The Voice, to drain London of 1,000 tons of gold per month. I mean, all these stories about official gold reserves are absolute nonsense. 1,000 tons a month from May of 2012 through the end of 2014. That was 30,000 tons of gold that moved to China. Yet, you got clownish websites and groups. Even GATA, Gold Antitrust Action Committee, even they focus a bit too much on the official gold reserves. And, China's got 1,300 tons of gold. Well, they've been moving 1,000 tons a month for 30 months. I don't care about official. It's really quite silly. So we've had a lot of shortages. We've seen a lot of waiting times for gold and silver purchases. We've seen a lot of dealer shelves lacking. We've seen a lot of coin shows with very little to offer. We've seen a lot of mints, as in U.S. Mint and Royal Canadian Mint, ration their supply, which is, by the way, illegal. It's illegal. They can't do that. They must buy to meet the demand. It's in the Constitution. Oh, I'm sorry. The Patriot Act rendered the Constitution null and void. So I always like to stress, Eli, that central banks have no silver in their supplies. There are no central bank vaults of silver, yet industry has tremendous demands for silver and really not much for gold. So it's a win for silver on the demand side. It's a win for silver on the supply side. It's just a win-win altogether for silver. I'd like to mention one thing regarding silver as replacement. There has been a battle in industry and technology. This has gone on for, maybe about 100 years to replace silver in certain applications, like for mirrors, like for electronics, like for photography development. It's a great conductor of electricity. It's a great reflector of images and light. Well, there has been one popular usage for silver recently, and that's been in solar panels. Photovoltaic panels. China just recently demonstrated without loss of efficiency a non-silver solar panel. So we might actually see some reduced demand in silver for solar, but it's going to continue for photography. I remember 10 years ago, there were a lot of clowns saying, oh gosh, with all the digital imaging going on with cameras, we're going to see silver just fall off on demand. And I said, yeah, right. In emerging market nations, in India, Pakistan, in Brazil, what they're going to go straight to digital cameras? I don't think so. It just doesn't work that way. The more advanced societies, the more advanced economies do move toward digital. I remember buying a digital camera back in 1999. I bought an Olympia camera, and I paid over $800 for it. Well, now you can buy a simple little cell phone, a smartphone, have a camera in it, and send images out, and your camera didn't even cost you more than, say, $120. Some of them don't even cost $80, but they're more primitive. Okay, the point is that silver has almost no competition. I always use the word almost in there. But there are three. I've mentioned these before. That they're worth mentioning again, Eli. There are three important changes in the silver market. Coins that are at least 3 years old are being given an extra premium, like in the past for, say, a 40-year-old coin or a 60-year-old coin. So if it's earlier than, say, 2012, suddenly it's got an extra premium. That was never there before. Okay, it's a sign of an added layer of premium in in older coins. The second one is the live market. Now, if you've got a multi-million-dollar or even $1 billion contract, and part of the provision is that $1 million worth of silver must be provided to the seller because that's what the seller stipulated in the contract, then typically they had been going to the live market where they would pay at least a 20% premium to acquire the emergency supply of silver. That entire live market is gone. There's no supply at all. And the last one is what they call the silver cycle. I like to call it silver recycle. It's the dining set silverware. It used to have an entire middleman structure where they would go to estate sales and buy up a lot and gather in, say, 5 or 6 estate sales, put it all together and sell baskets full of silverware to the refiners. Now the entire middleman is gone. It's all gone. They're going straight from the estate sales to the refineries, and I don't really know how that all works, except that there is no more middleman purchaser doing so at a 10 to 15% discount versus the spot price. They're getting a higher price, and the middleman is being eliminated. So these developments, Eli, point to the silver market being extremely important and critical, and I think it's going to be the breaking point. It doesn't look like gold is going to break down the market. It looks like silver is going to break down. By break down, I mean smash the door down, expose the corruption, allow for a higher price, get some publicity, and a lot more.
Now, I'd like to discuss a little bit more about the precious metal markets and how kind of the whole paper market works. You were talking about in your recent article, I'll just take a quote from it. You said, "The entire concept of contractual paper price discovery has been corrupted beyond all recognition. The claims of paper contracts per ounce versus actual gold has run to almost 300 to 1 in recent months. It was considered outrageous 2 years ago when it was only at 25 to 1 or 40 to 1 in ratio. So can you expand a little bit on this?"
The paper gold contract system has been perverting and corrupting the system by system, I mean the gold market, has been converting the pricing of the gold market for well over 20 years. Now, what they claimed back in the 90s was that price discovery could come about by making contractual obligations on future delivery. Okay, like right now, it would be for a June delivery of gold on a June contract. The big contracts are all divisible by 3 on the month: March, June, September, December. They're very big months, and to be sure, there's a May contract, but it's nothing like the volume of a June contract. So every 3 months, there's a big cleaning of the house regarding commitments, obligations, and payments, etc. They call it price discovery. But then they stopped delivering on the gold. And actually back in June of 2012, J.P. Morgan made sure that the COMEX stopped all delivery of gold on gold futures contracts. So in other words, you'd make a purchase for gold and lay down the margin. And when you came time to buy it, what they told you was, well, you're going to have to take your cash back at the current prices, but you can buy another. What an absurdity. Okay, the price discovery system got knocked on its side from the illegality and corruption because just like in the week of April 19th, they throw $2 billion worth of paper gold at the market to keep the price down with no intention of seeing any satisfaction of those contracts in actual delivery. In other words, they corrupted the market, just throwing commitments at it and never delivered on them. But there's no law enforcement because the Wall Street banks are in collusion with the Department of Treasury to make sure that the Commodity Futures Trading Commission, which is like the SEC for commodities, the CFTC never enforces the law. They threaten to enforce the law, and Gary Gensler made nice words, but no actions. They're always nice words and no actions. And then they eventually come out with some words that, well, national security is at stake. We can't follow through on action here. In other words, we have to let the corruption continue because it's supporting the whole entire dollar structure. Well, the ratio, this is a little tricky to explain, and it's funny how the words never come out perfectly. But there are lots and lots of contracts and obligations and commitments for gold ounces, physical ounces. These commitments are in contracts. They're called paper gold. The paper gold has overwhelmed the actual physical gold. If you add up all the different contracts pertaining to gold, like we have the rights for this gold and we will sell it at this price at this time and maybe even to this party. Add up all the volume for the commitments on gold, and it's over 300 times the amount of gold out there. Whoa. Okay, so it's like playing a game with your house titles. Can you imagine even 10 people having a claim on your house title, your property title? Well, what happens when they all come forward at once? That's exactly the problem gold's going to have. Can you imagine multiple fire insurance policies on your home? Well, that's a related issue. It has to do with, say, credit default swaps, which is like a bond insurance for a corporate bond. Okay, we have 200 of those fire insurance policies held for every home. 200 to 1. The home in this case is the corporate bond, like a J.P. Morgan corporate bond or a Goldman Sachs corporate bond or Merrill Lynch or whatever. Can you imagine at a Sotheby auction where 50 people lay claim to a prized Van Gogh painting, all making a bid for the same object? What happens? The price goes up. This is what's coming to the gold market. It's horrendously overcommitted. The ratio for silver is not quite exactly the same, but I always like to make a good explanation of this. Whereas gold has about a 300 to 1 commitment, I think the last figure I heard was 340 or 327 to 1. The ratio for silver is like 35 to 1. Well, gosh, doesn't that mean silver's a lot weaker? No. It actually means the opposite. Since silver is demanded much, much more in industry, in fabrication, in photography, in solar panels, it's actually got tangible demand. Even a 3 to 1 ratio would be critical to break down the silver market. They've got a 30 to 1. So, this is all great disruption, Elijah, and it's going to have to be resolved. And it looks to me rather clearly in the last several weeks that silver's going to be breaking down the door. I've always been saying gold will knock down the door after fighting the big political and banking battles, the wars. But once the door is broken down, you're going to see silver fly on through on a white horse. But now I'm starting to think silver's going to break down the door, allow gold to rush through, and silver's going to rush through even faster. That's what it's looking like.
So how is the manipulation of the prices of gold and silver affecting precious metal miners?
In a severe way.
Hey everyone, thanks for watching. Click here to subscribe for free to be notified when the rest of this interview is released, or click over here to watch the full interview now.